Venezuelan bonds are surging. Is the smart money telling us something? Well, today we're going to discuss.
Welcome to Venezuela Insider, the only place in Venezuela for expats, digital nomads, entrepreneurs, investors, travelers, and related internationals. For more information, venezuelainsider.com.
Today we are going to discuss the rising prices on the bonds about Venezuela, sovereign bonds, corporate bonds, and if the quote unquote smart money is telling us something about what is going to happen in the country. So let's start. This report, I've read several reports, I do this for a living, but the latest one just a few days ago came from Reuters and did a piece regarding the Venezuelan bonds surging in the country. According to Reuters, it's a very accurate information. The Venezuelan bonds rallied 80% year to date. So since the beginning of the year, the Venezuelan bonds have been surging, and 20% quarter to date, basically since the last quarter, since this issue, the military buildup started. So that is the market telling us something. Those bonds were priced cents on the dollar with hefty discounts between it's right now between 14 and 22 cents on the dollar because they have steep discounts. Now let's go just quickly on what's all about regarding Venezuelan bonds. First, you have to know that those bonds are on default since 2017. Back then, also thanks to the sanctions, Maduro was not recognized by the US back then as the legitimate leader of Venezuela. Therefore, he was cut from accessing, the government apparatus, the financial government apparatus, to the rest of the world. Now, the Venezuelan government, since Hugo Chavez 2002 and 2003, they disconnected the SWIFT system of the Venezuelan banks for the rest of the world. And then 12 years later, Visa and MasterCard issues with that. But yet again, but officially, the US financial system disconnected the Venezuelan government to the basically this the financial world, especially on investment banking and things like that. Okay, so therefore they haven't been able to service the debt on different bonds structures. On this particular debt, the total amount outstanding is around 60 billion US dollars. However, if you add the interest and the legal fees for a bunch of settlements that they have to do and different affairs, that amount rises to 150 billion US dollars, give or take. That will be around 150%, a little bit less, or a debt to GDP ratio. Okay, let's keep going. Like I said previously, those Venezuelan bonds have a significant haircut over the face value, so roughly 20, 25. They are worth right now, according to the trading, 20, 25 cents on the dollar plus the coupon rate. No, now the special analyst, and I include myself, most this will be, the Venezuelan debt restructure will be the most complex debt restructure in history after a political change. If such political change did not happen, most likely the bondholders, they're gonna be they will be holding the bag if it doesn't happen. That's why basically you have to. That's why it is a risky bet. However, that bet has become less risky due to the fact that the probabilities or a quote unquote political change are rising rapidly, mostly thanks to this strong military buildup in the Caribbean. So, read between the lines. Now, which bonds do Venezuela has on the open market. Well, there is a mix between sovereign bonds and the corporative bonds of the state-owned oil company PDVSA, is kind of a big player on the oil industry, at least it used to be. So basically, you have a plethora of sovereign bonds. Not all bonds are equal regarding the status, the total debt amount, and how it's gonna get paid. Well, first we have to go to the global bonds. We even have bonds issued since 1997. That's even before the Chavismo and Hugo Chavez rose to power. And we have a 1997 bond issued in 1997 that is the maturity is on 2027 con a coupon rate of 9.25%, and the total debt amount, the outstanding, is 4 billion. You also have bonds that have reached the maturity date, aka they are on default right now, and the bondholders are waiting for some sort of restructure on such bonds. You have like the 2023 bond maturity with a coupon rate of 9%, roughly 1.5 billion, the total outstanding amount. You also have one defaulted since 2022, 12.17% of coupon rate, around 3 billion. You also have other bonds that they are the Venezuelan external debt bond. The maturity is on 2036. Now, the issue is those bonds are sanctioned and they are held solely by the Venezuelan government because they are sanctioned by the Treasury Department. So keep that in mind. Also, depending on the bond, these bonds don't trade, like on a typical bond market like the T-bills or the Euro bonds or something like that. They trade on a secondary market, depends also thanks to the sanctions, also thanks to the complicated legal structure, because depending on the country, some countries don't even recognize Maduro as the legitimate governor of Venezuela. Therefore, they cannot take or issue debt. For instance, the IMF and the World Bank, they cut Maduro from having any particular debt issuance since like 6 years or so, since they don't recognize Maduro and they are waiting the political situation in Venezuela to be resolved. Therefore, when that happens, both IMF and the World Bank are be willing to issue some debt to the Venezuelan government, whoever is in charge of the Venezuelan government. Then, yeah, it's a bit complicated. Venezuela is not for the faint-hearted. Anyways, now let's go with the PDVSA bonds. That's where things get more interesting. Since the sovereign bonds, are actually more valuable cents on the dollar because, you are issuing the money to a country. Meanwhile, the PDVSA bonds, regardless if the company is state-owned, still is riskier to lend money to a company rather than a sovereign nation. And that's the issue that we have right now with PDVSA. We have a series of bonds, the PDVSA Global. We have 2020 maturity, 2024 maturity, 2026 maturity. And the issue, and overall, the debt of PDVSA is around 60 billion. But that's overall, not just on these particular bonds. And for instance, something very interesting happens with the PDVSA Global, that the maturity was on 2025, since this particular series of the bonds were issued with using Citgo as a collateral. Citgo is basically the US version of PDVSA. Citgo is a company that has bases in Houston and also in Louisiana, that owns refineries and gas stations and things of that nature. and that particular company was seized from the government of Maduro, and right now is being handed by people appointed by, the quote unquote government of Juan Guaido. And those are the people managing the company right now. However, there is a legal limbo situation where the company might be sold cents on the dollar according to a federal judge, and a lot of court sentences have been issued in Delaware, but they go back and forth for another company to buy the Citgo cents on the dollar. And this particular bonds of PDVSA have been issued using Citgo as a collateral. So it's a draconian legal situation right now. But apparently, the people who are interested in buying the Citgo cents on the dollar still have to pay a couple of billion in order to retribute the current bond holders to their investment. So it's a complicated situation. Actually, we covered it a lot on our newsletter, going play by play on what's going on. But besides that, PDVSA has a couple of other bonds that are not collateralized with Citgo, and are, of course, in one is on default, another one is on a legal limbo situation. Roughly over 10 billion on debt on those particular bonds that are not collateralized. So we're waiting that is going to happen. Bottom line, what the market is telling us, and if should you buy Venezuelan bonds? Well, first, this is not financial financial advice. Do your own due diligence. This is just for information and educational purposes. Okay, the first thing is that this saying in finance, the dumb money is on the stock market and the smart money is on the bond market. Well, if that's the case, the smart money is betting on Venezuela, is betting that is gonna be a change somehow by institutional investors. That's what the market is saying. That's not what I'm saying. Wink, wink. That's the first thing. The second thing is regarding investing in Venezuelan bonds. Is a risky, I have to say it's risky, and also requires some liquid capital that you have to park over there and wait something happens. And if you want to speculate, honestly, if you are a retailer investor and you want to speculate on what is going to happen in Venezuela, I will suggest just betting on Polymarket. Actually, it's very straightforward on that regard. It's very practical and very, very entertaining. I have to say, I always check Polymarket. I see, the fluctuations. Is for entertainment purposes. Is amusing, and for practical reasons that if you want to gamble on the current situation right now, I would say just go for Polymarket. Polymarket has a plethora of bets regarding Venezuela and their current situation. So betting on the markets overall, well, on the bond market, I would say, it's up to you, depending on your risk profile, and also it's kind of complicated. It's not as straightforward as, buying the S&P or buying T-bills, the US Treasury bonds, or buying Bitcoin or something like that. So it's more complicated than that, way more complicated than that, actually. So that will be up to you. So that will be all for today's episode regarding the bond market. This is just, food for thought regarding what's going on with the market. I'm a finance geek, so I like to keep in touch of these things. So thank you again for watching. We'll see each other on the next video.
Thank you for watching Venezuela Insider. Please like, share, and subscribe. Follow us on social media. If you want to work with us, venezuelainsider.com. Thanks again and have a nice day.